No. Good day, everybody. This is the Option Professor speaking, and just a quick background on what we do down here. OptionProfessor.com is the website. OptionProfessor.com is the website. And every week we do have a weekly market update that we send out on everything from the stock market to the bond market to the different energy markets and currencies, and basically the whole 9 yards, international, and it's free of charge. So basically, if you go to the website, you put in your email, you'll get that in the inbox every week. A little background about ourselves here. I'm a graduate of Boston College, and I've been in the investment arena here for many decades. We have done seminars throughout the country and actually internationally. Both live in hotels and the trade shows like the Money Show, but also these internet meetings with Zoom and webinars, et cetera. We have product knowledge across the board because we've been doing this for so long. And basically, we try to share not only option information, but general investing information as well. Everything we share is our opinion. And we always say that you should consult your brokerage firm, your broker, your investment advisor to determine what your suitability is, right? And what is right for you. And once you determine your own suitability, then you act accordingly. What we do provide is information. We do not provide advice. Okay, so that's what I'm going to be sharing with you today is our opinions and our views on things. And there's a lot to cover. Please get a pen and paper because it's going to go pretty fast because there's a lot of information to cover. I'm going to be giving you the chart to look at, and then I'm going to give you my view on what I'm seeing and what I feel. Okay. All right, so let's start out with the stock market, which has absolutely gone nuts here. Now, people who listen to our alert that we sent out a few days back, as well as, and you get the alert when you go to the website as well. If you go to look at the market, we were thinking that the low area of 4,300 ballpark area had to hold, or else we could get a very big major leg down. So this action today is quite necessary to keep the lows in. So we see right now on the 1 year chart, those lows. Okay, there's a better than even chance that they're going to be the lows for the fourth quarter. Okay, so now at least you have a line in the sand to work with. Secondly, the RSI down here is just getting to 50. So right now, I would not be suggesting anybody think about putting new positions on right this second, and I'll show you why. I'll show you the same other idea about a month ago when we broke under 4,500 on the S&P. We were telling people that unless we close back above 4,500 and sustain it, we want no part of this thing because a drop is probably going to occur as we see the moving averages were deteriorating. Right? So obviously that was very accurate information. Now the accurate information we think we can provide is this. If you look at the 5-year graph and the moving average comes in right at, this is the 12 SMA, comes in at 44.45. Let's call it 44.50 ballpark. Okay. Today's high is 44.30. And so basically we haven't hit that yet, but that's, I think, going to be some resistance, right? Okay, so there you got that there. Now, if you go to the 1 year graph, you'll notice that the 36 SMA comes in at 44.41. So this 44.40, 44.50 neighborhood, I think could be some resistance and could be an area to take some, if you have some short-term gains, maybe book them. Right? Or hedge them, sell the out of the money call, buy a put, collar the darn thing, or something along those lines. So basically, I'm just giving you this as a point of reference. You see also there's a gap. I'm going to go to a shorter term graph on the 3 month and it might be more obvious. Can you see there's a gap there between 44.40 and around 44.20? And we are going into that gap. Okay. And even on the 3 month thing, you can see it there. So why would I be thinking that there could be some resistance in the 44.40, 44.50 level? One is the RSI on the shorter term graphs are just getting back to 50. So they're not really zooming into positive territory yet. You've got some moving averages on the 5-year with the 12 SMA and the shorter term with the 36 SMA converging at around the same price at around 44.40, 44.50. So I would be careful of that neighborhood, and you combine it with a gap that's being filled. Again, the VIX is under 20, but it's not way under 20. So, and obviously this is a lot of buying going on. You always have to say when everybody's selling or everybody's buying, right? You always got to ask your question, well, who's on the other side? In other words, who's the moron here? When we go down to 42.80 and everybody's selling, who's the smart guy and who's the dumb guy? Today, we're jumping up here to 44.40. Well, somebody's buying and somebody's selling. Who's the smart guy? Well, if we can't get through 44.40, 44.50, the smart guy might be the guy who's fading this action. Okay. So, and then you got a gap down here now. So maybe they're going to go down and get that gap. You don't know. Again, jobs report is supposed to have like 700,000 new jobs, and the report today on claims showed a 38,000 differential reduction. Everyone getting their party hats out over that. That's not a great situation. And then the raising of the debt ceiling. I mean, did anyone ever think they weren't going to do that? I mean, really? So, these are not earth-shattering developments so far. And there's a ton of buying going on here today. Now, again, if we break through 44.50, then obviously you're in a different ballgame. And give it to you there. If you start getting above this, but again, these three moving averages are crossed to the downside. And, I respect that because you notice the bull market on the way up, that doesn't happen a whole lot. So this is the first time we've seen them all really cross this much, right? And then the RSI, got pretty good down into the lower areas. It looks like it's ready to fly if it goes through 50. That's why I say if we break through 44.50, which would be this numbers up here, right here, that area there. What's that? 44.60. If you start breaking above those numbers there, then obviously we're going to go after the highs. Okay, but right now that's not happening, right? So if it happens, then I would change my tune. If it doesn't happen, I'll stick by my guns. Okay. All right. So there's a little rundown of what's going on today. Maybe throwing a little water on the parade. I hate to do that, but my job is to try to give you my honest opinions, not the ones everybody wants to hear. Okay. So today we are going to be talking about cannabis and the different commodities, and commodities have gone nuts this year. So obviously there's a lot to talk about there. The key is are they going to continue? And, is there still opportunity, and where are the opportunities? So I'm going to be going through all the commodity charts here, and I'm going to give you a brief explanation, like a lightning round of what I'm seeing and what my opinion is. Okay. So again, big picture, there are shortages in commodities. Why? Because with COVID, they stopped making things. And when you stop making things and then the people come back to with their demand, and their demand is being fueled by the highest net worths of households ever, and the most money in the bank ever, and inability to spend it in the frivolous ways we used to, it's going to cause a lot of demand. And the demand cannot be met when you have COVID reduced bottlenecks. And that includes everything from refrigerators to chips to, couches to food. Okay. So that's the big story. And you don't have to go to Harvard. I went to Boston College. It was close to Harvard, but you don't have to go to Harvard to figure out that when your supplies have tightened up and the demand goes through the roof, you're going to get higher prices, and you're going to get inflation, and you're going to get problems with regards to bottlenecks, et cetera. Okay. All right. So that's the big picture. Now let's look at the small individual pictures. We're going to start out with the price of corn. And I'm going to look at these things three different ways: a 1 year, 5 year, and a 20-year basis. So you get a little perspective. I like to look at perspective. You change your time frames. If you guys are short-term traders, I'm sure you use a 5-minute graph, an hourly graph, a 30-minute graph, and then you kind of look at what the soup looks like, right? Same idea here, only a little longer term. Okay, so if we go to the 20-year graph, what are we looking like on corn? That's what a squeeze looks like. That's when there is not enough product, and the people are short, and the demand is huge, and you have a problem with your crops. That's what happens. Okay. So what a move, right? Now it's back down here. Your moving averages on the long term are still rising. So this is still a bull market, but it's certainly a much better market closer to 450 and 5 than it was up at 750. So again, worldwide, everyone is richer. Worldwide, everybody is hungry. Worldwide, populations are growing. So what does that mean? The demand for food is going to be growing and growing and growing and growing, and there's only so much growing going on, right? Now you throw weather in. You know, the weather in Brazil has been lousy and weird. Weather here has been weird. And so the bottom line is if you have bad weather, not only do you not have the crop that you expected, which may not have been enough to satisfy demand, but you got a lot less. So the bottom line is that with the global warming, which people say is only a joke, seems to be very real, and the likelihood of smooth sailing on weather seems to be a bad bet. So anyway, the corn certainly still looks like it's got some life left in it on a 5-year graph. Let's take a look. Again, it's underneath all the moving averages now, so that's not good, but it has held this 5 area. Again, you'd like to see it back above 6 on the 5-year graph to get moving again. And let's take a look here on the 1-year graph. On the 1-year graph, again, if it looks like we had it, now where's the RSI? Right at 50. This baby gets back above 550, and these averages start crossing. We're back in a bull market in my view. Okay, so there's your story on corn. Let's go over to wheat. And these grains are going to have similar looks to them, generally speaking. I always like to look at soybeans because I figure if you're going to speculate on something, speculate on the one that seems to move the most. Anyway, on wheat here, if you look at the 20-year deal, looks like an up market. Look at the 5-year deal. Looks like an up market. And look at the 1-year deal, and it still looks pretty good. Okay, so wheat obviously still looks pretty good. And here is what I call the Ferrari of the grains, because it is the fastest car generally. Basically on soybeans, this is for November of this year. You can see on a 20-year graph. Now we got very bullish in our newsletter here, right as soon as it broke above 9. Can you see why? Okay, because this was turning up, and then your RSI was breaking above 50. So there was your buy signal. So it's very difficult for us to do any business way up here because this thing was something we were positive down here at 9 and 10. Okay, now it's pulled back. And you see this high point here of 12. You notice it's still above that. If it can stay above 12, I think that's very positive. And could it make another run up here at some point? Again, the RSI is right at 50. So if you're ever going to mess around with this stuff, I would use 12 as a line in the sand to defend. And I would hope that this 50 number is about as far as RSI is going. And certainly if it gets back above the 12 SMA, which is 1372, that would be very positive. That's why on a long-term graph, it looks a little bit better than the shorter term. Here, it just looks like a lousy market, and it might be. But if it can hold 12 and start getting above some of these averages, that would be positive. And look at this RSI. If it can get above 50, then I would be more constructive on it. Looking at the 1 year. Yeah, again, we need to get this RSI above 50 because you can see when it's above 50, that's when it can go. And we need to get the prices above 13 here to really get it a bit of a turn. So again, on a short-term basis, it still looks premature, but they say that China's having a lot of problems with their soybean activities. So I would keep an eye on it. Right now, it doesn't look that great, but if it got above 13, I would change my tune, and I would still use that 12 number as a defensible number. All right, there's your grains. Let's talk about energy because that's the one everybody wants to talk about. Now, we've been, positive on energy since last March. So you go negative $37 a barrel, that's called a capitulation drop. Okay. You're not going to get worse than minus $37 a barrel. So we've been positive on this thing for a long time. I'll give you an idea of what I'm talking about here. I mean, this is where it went negative 37. Is that a joke? This is for something that everybody uses in their car on every highway in America, and it's going for negative 37. So obviously, once it's got above the blue lines here at around 35, it was a buy. And as you can see, it's still a buy. And when you come down here and you test it, that's the best buy. Right now, obviously, it's extended, so that's a little bit nerve-wracking. But some people think this thing could fly right to 100. I don't know that that's going to happen, but the setup is there. Your RSI is above 50. You broke to a new high there, and the moving averages are all crossing and rising. So certainly anything on the upside could happen at this point because the technicals look great. And again, these wind turbines aren't working. This hydro is not working. The solar is not working. So they have to go back to fossil fuels to get their energy. And the fossil fuel guys haven't put any money into exploring for anything. So do the math. Everybody's coming back to the table for some supply. The guys who do the supply haven't been looking for any supply. So it's going to be a squeeze. And that's what's going on. Now, JP Morgan said they didn't predict this, but they said that, even if oil goes to $135 a barrel, they think stocks will still be okay. So even using a number, they didn't say that's going to happen, but they didn't make that comment because they don't think it could ever happen. Simply, they're looking at the graphs as we are, that it's breaking to a new high. The technicals look fine, and it looks like it could have some pretty big power on the upside. On a very short-term basis, obviously it peaked up at 80. So 80 is a problem right now, but it's holding the 12 SMA, and that's coming in at 75, 70. And then the other numbers are in 70 and 72 land. This area here, 72, 73 should be support like it was during this drop. So again, energy may have a very bright future, but again, it's becoming extremely popular. But again, there's nothing negative to say on it right now. So that's what energy looks like. And is there potential on the upside? Obviously, they tried to hit it today and it's already back in their face, right? So that's not bad. Next one is natural gas. That's been going through the roof, something we've been positive on since 2.50. And we will tell you here on the natural gas. Now, this dropped sharply 10% over in Europe, I guess, lately, but look how far it went. Come on, it went to 640. Of course, it's going to pull back. Again, where did we get positive? You see down here when it crosses, when all these numbers cross, that's when we say it's time to look at it, right? And if you look at the 20-year, bring the lens out, this thing has plenty of real estate if it wants to go. All this area up here where it used to be. I don't know that it's going to do that, but, this stuff here under 3 was inordinately low. And when things are inordinately low, sometimes they stop making it. And when they stop making it, and then all of a sudden, all this green energy stops working, then you got to have these people buying this stuff again, and you haven't gotten the supplies. So bam, there you go. Let's see on a 5-year what it looks like. Okay, so on a 5-year, this thing could pull back all the way down to where this high is anyway, around 5, and even 450. Okay, and on a 1-year, yeah, again, you're coming in around 5. So I would say right around 5 would be about as low as you'd ever want to see it in the short run here. And if you're trading it on a short basis, right here, 533 would be something you'd want to have hold as well. But certainly it's been a big run. And as you can see, you want to know why there's inflation? You're looking at it. There's plenty of inflation out there. Let's give you a couple of seasonal ones. Heating oil. I guess it gets pretty cold in January. Let's see what the January thing goes for. Is there something going on in heating oil? Well, it's already gone a pretty good move, but if you go back 20 years, you can see that can change a lot. It got above this high point here, which I think is kind of important. As you can see, when it got above this high point here, it really gained further. RSI is above 50. So, heating oil is in a bull market. Again, extended possibly. So, could it pull back to 220 on a sharp pullback? Yeah. If it did that, would that be a better place to buy? Probably. And a 1-year? Okay. Yeah. 1 year again. You pull back to 220, 230 might be a better place to take take a position if you are bullish. All right, so there's your heating oil, and let's see what gasoline prices look like they're going to be going for. I think at the pump, they seem to be moderating for some reason. I don't know why. Let's find out if that's going to not last. Probably not last. Yeah, well, it came down a little bit here. But again, just like all the energy products, they are in an uptrend. There, the 20-year graph gives you an idea that if it got going, there's still real estate above. And the RSI is above 50. So, that's a positive situation. And not surprising. Let's just take a look real quick on crude. And if we can see anything on the long-term graph here that might be able to give an indicator where some resistance might be. Okay, where would the resistance? These are lows right here, and that comes in at 90. So 90 could be some resistance because these were former lows. So I'd be careful around 90. And then, of course, the 110 area, 100, which is where all those highs were back in 2011, 2015. And again, thinking about it, we came out of a big drop in the 08, and then we had a rally in energy. We just came out of a big drop in 2020, and we're having a big rally in energy. Within the first period is where energy hit a peak. Then it didn't do much as it as things moderated, and so it went into a sideways consolidation. It would not surprise me if it can pop to 110. We might go into an 80 to 110 consolidation, not unlike what we saw here. So that's something that the long-term graph might give you a hint on that you wouldn't get from shorter-term graphs. Okay, let's look at something that I think is kind of important now, which is these metals, because they meaning the Fed and the Treasury, these guys have printed an awful lot of money. The monetary base has just gone through the roof. So, Bitcoin, we've been very popular on big drops. When we dropped down to 25 on GBTC, which I'll show you in a minute, that's where we thought it was a good bargain. Not when it rallies to 50 or 55. So every time it has a pullback, that's the time that we are more interested. Do we think it could go to 100,000 this year or 90,000? Anything's possible, okay? But we definitely think that there's still a big future on it because, again, it is a limited supply on the Bitcoin. It is becoming more and more popular. People are becoming more and more concerned about paper currency, and people are more electronic and digitally oriented than they ever were. And the generation coming in, the millennials, they are very, very comfortable with digital world. Okay, so the baby boomers and the senior citizens are on their way out, and the new crowd coming in, they're all about digital and computer. So it makes some really common sense that there's a big future for this stuff. The questions is will the governments get in there and start doing stuff like they did with gold, where they outlawed it during that great Roosevelt time, where he said, you couldn't own it or whatever. So the bottom line is that's the risk with the Bitcoin. As you can see, they said gold was going to be pegged at $35 an ounce, and it's at 1,700. So, even if you tell people they can't do something, that doesn't mean they're not going to do it, right? So bottom line is why do we think the gold might be the play of the quarter? Because of the printing of money and the dynamic between the inflation rate and the interest rate. Now, again, I've been in this thing for decades, so I know all the different times that the market has done well and not well. So when the 1980s were going on, inflation was huge. We haven't had inflation to speak of in a long, long time, right? I mean, come on. We haven't seen those kind of numbers that you're seeing and next week we're going to get a CPI, and they're probably not even going to be realistic numbers based on what the real world's charging out there. But at any rate, in the 80s, we had inflation during the Jimmy Carter deal jump up to about 10%, right? And interest rates were at like 3 or 4 or 5%. So that made a situation where inflation was way higher than the interest you're getting. It's called negative real returns. And we got negative real returns across the board now. Junk bonds, the lowest form of life in the debt market, are at negative yields, which means you're loaning money to a bunch of hobos and they are paying you back at a rate that's lower than the inflation rate. That's outrageous. So outrageous doesn't last. And so as the longer this thing happens, there's a possibility of a real pop in these metals. And I'm not Pollyanna here, and I'm not a gold bug, because when it's up here at 2100, I'm pleading with people, don't get in. And when it's down here at 1300, I'm pleading with people to take a position if they are suitable and if they are interested. Okay. So right now, I am very interested in seeing if this low will hold, which is 1675 ballpark, and if we can get above these two averages. The last last moving average here that is in jeopardy would be at 1625. I don't know that we're going to get down that low. Okay. So, this thing is dead, a dead market to people. People are not into this stuff anymore. And it's not really that far off the high when you look at the 20-year picture. Now, the point being is if this is a low and that's a higher low, that's a good thing. And you see these averages here, the blue and the green, those are the 24 and the 36 SMA, they're rising. They're rising. And so the green one, the 24 SMA, comes in at 1756. We are right there now. So it's very important to watch these prices now, because if it holds this number here, 1700 and 1675, and we start getting above the red line, which is what? 1794. Okay. Let's see what it is. Maybe it's even lower. Nope. Yeah. 1794. Okay. If we can get above that, 1794, and then start closing above these highs, which is 1833, that opens the door. And look at your RSI. It's right at 50. So do I think this is a very exciting market? Yes. Why? Because nobody's in it yet. And the prices are down off their high, $400 almost, which is really not that much. What is that? I mean, everyone thinks that the gold market died. The percentage move there is about $300, 15% drop after a move from 1200 to 2100. Is that a collapse? No. And the lows here are held and the lows here held. So right now, again, I don't want to be the first guy at the party. So I'd like to see it closing above 1795 and then 1833. And then I think something could be happening. So let's keep an eye on the metals. Silver. Silver, let's see. All right. Silver, kind of same story. I mean, if you're ever going to like it, you got to like it near 20, right? Green line's moving up and it's trying to, so here's a big number for silver. A big number for silver is 2230. It's above that now. That's a good thing. Okay. And this low right here has been 2150. So 2150 is a number, and this long-term moving average here at 2230 is another. And then of course you come in about $20. RSI right at 50. So my view is these metals are very, very, very interesting right now to be monitoring, because if they hold these areas and if they start taking out on silver $25, it's going to, and then if it took out $30, it's going to open up a lot of action here. Silver is a double whammer. It's a monetary metal and it's also an industrial metal, and it's involved with the electric vehicles and the batteries and a bunch of other things, solar panels, which is all what the future is supposed to be about. So you got a little bit of demand there from the industrial side, and you've got the monetary metal. And this stuff can, when it gets going, as you can see on a percentage basis, does a lot more than the gold. Okay, because from here 15 to 50 is a 300% move, and gold does not go up 300% lately. Okay, so this is one I'd keep an eye on as well. The other one that's way out of favor here in the precious metals area is platinum. And platinum used to be, it's 10 times rarer than gold, and it used to trade at a premium, and it's now trading at a $700 discount. So let's see if there's anything here. Yeah, you know, platinum looks interesting. It did penetrate its long-term average here, but it's above it again. And it's above its green line, which comes in at 980. So, you know, watch it. You know, this where's the RSI on it? Right at 50. So, you know, you got a moving average coming in here at 937. Let's call it 940. You got a moving average here coming in at 980, let's call it. And then you got another one here at about 1080. So those are three good lines in the sand. If you can hold here, it's a good deal. If it gets above here, it's getting to be a better deal. And if it gets above here, it could be on its way to somewhere significantly higher. And with the RSI right there, I'd keep an eye on this one too. One last metal here we'll cover is copper. A lot of people own Freeport-McMoRan or McMoRan, however you want to pronounce it. And let's take a look at copper. Yeah, big run on copper, way overbought, but it's been holding the red line here. So what do you want it to hold above? You want it to hold above 410. Okay. And as long as it holds above 410, I'd be constructive on it. Started taking out $4. That would change the tune a bit. And infrastructure is supposed to be helpful to this thing. So, you know, maybe there's some future to it. And maybe this is a down flag up hold that's going to happen. But, you know, pretty reasonable line in the sand, right around 410. And if it breaks there, you can see there's a lot of real estate underneath. So this is a time where copper's got to hold its own, or it's going to have a more significant drop, not unlike lumber, which I'll show you. Again, if you have all the lumber yards not working, and you get everybody building houses and pouring all their money, and millennials pouring all their money into new homes, that's what it looks like. But can you see when things go parabolic, you have to keep getting people who want to pay $1,700 for it, and that doesn't last, because you see, that's why you have to be worried about chasing bottlenecks, because after a bottleneck comes a resolution. And they obviously resolved this quite a bit. Now, this thing came down all the way to the support, because that high was support. So that would be the place you would have been buying, or wait for it to get back above the blue line. The blue line comes in at 564. So as soon as it got above 564, you got your buy signal. If this thing can get above what? This one here, which is 667, that would be very positive. So could this stuff go right back up again? Absolutely. Is the RSI right at the number where it's got to make a decision? It's at 50. So it's either going to fail from here and the party's over, or this is the time to go back into the party and use some of these lines in the sand, maybe the moving averages, as a guide. Okay. All right. So that gets you the precious metals, and just a sidebar there. Let's go over briefly a couple of other things, because we don't have a ton of time left on this. Want to get into the cannabis stuff. Just go over quickly the meats real quick. Again, they're all supply demand stuff. Again, still looking like it's trying to get going. The RSI is still positive. So here you'd like it to stay above 113 and then 119 to stay positive. Looking at the live hogs. Live hogs. Let's go March of next year, see what's going out there. That's the wrong chart. Let's keep going though, because I want to get into this this market here. We were bullish on last year, and you'll see why. Again, in the newsletter, we cover all this stuff, so that's why you'd want to get the weekly updates. Coffee for March of next year. I'll show you exactly why we got positive on it and exactly why we've stayed aside here for a while. But this stuff's up 80% this year. Now you can see this thing went positive at around 110 and it never looked back since. Now it's overbought. It could pull back, right? It's overbought, could pull back. RSI is up there pretty much in the 70 area. But obviously you're seeing that once something goes into this area, it can accelerate into areas that you can hardly believe. And this contract is $375 for every point it moves. So there's a lot of activity there. So coffee is in a bull market, but it could pull back, but you're getting an idea why there's inflation. Next one is sugar, same story. I'll show you where we got positive there last year. Not this one. Of course, this is the stock way of trading it. Let's go to March of next year. Okay, right now you can see here on the sugar, we got positive at 1250. So these things gave us the buy signal at 1250 down here. And obviously it was a great ride, right? But again, it's a little bit overbought. But look, there's no reason why it couldn't keep going if there's going to be shortages. But it is overbought, and that's why we're not particularly interested in it anymore. If it had a correction, then we would become more interested. Okay, cocoa is the last one on the softs there. This is all your chocolate, right? Again, bull market here, and RSI, I'm sure, is right above 50. And where'd you get your signal? Your signal came after, but it's choppy. You're long, you're out, you're long. So again, it's having probably some trouble here at 280, 2800. And again, the averages are way down here. So it's a little bit extended off the numbers. Generally, when it gets extended, it comes back. This is called reversion to the mean, reversion to the mean. Okay. And so up here, it's a little bit extended, but certainly it's in a positive mode. All right, let's look at some currencies here. Dollar index. Okay, US dollar index. We got negative on this thing when it was up at 104. When it broke, we got positive on this thing when it tested the 88.90 area and held. So basically, again, this thing broke. I'll show you on a shorter term graph, like a 5-year graph. This thing kind of broke from, well, on a 1 year, it even shows you better. Yep, we'll go to the 5-year. Yeah, again, you see when the red line starts breaking up here, you're getting a sell signal up here at about 100, and you got your buy signal down here when the thing double bottomed here and then got going at about 91. So ever since 91, we've been kind of constructive, a little bit overbought, but this thing does not look like a bear market right now. Now, again, if it cannot get above this number here, which is where we believe it may have trouble, which is in the area of about 95 and change, so about a 1 point higher than here, it could have trouble because there's lows there. That's going to be a problem. And you got the blue line right there. And where's your RSI? Right at 50. So this dollar could start tanking off of this number very easily. Okay, so I'd be watching 95.15. See if we can get above that. If we can't, then that means that held, and that means that held, and that means the 50 is going to go down. And that means that would be another catalyst maybe for the gold to fly and the silver to fly. So I don't know what the news is going to be, but that would be news that would be consistent with a scenario of the metals having a big fourth quarter rally going into the new year. Inflation's high, and if the dollar rolls over, that could be the match that lights the fuse. So you're right there, right there. Okay, and so if the dollar were to have trouble here, what would the other currencies look like? Euro currency. Look to me like the euro should hold 115 if it's any good, and if it blows back above 120, it's in the ballpark again. Yeah. So, if I want it to hold 115, you see that area there? So if it holds 115, I think you're okay. If it blows back above 120, I think it's you're on your way. That's my view on the euro. Talking about the Japanese yen, no, forget about that one. Let's talk about the Canadian dollar and the Australian dollar, because these are commodity-based currencies, and maybe they are going to have more of a future. You saw commodities up big time, right? So you're seeing these currencies have gone up as well. You see, you were at 70, you went all the way up to 85, pulled back here, so that could be the buy. So I would be very positive on the Canadian dollar as long as it stayed above these averages, which comes in at around 76, 77. You stay above 76, 77, you start breaking above 80, and maybe it's going to follow the gold on the way up. Australian dollar, another commodity-based currency. Australian dollar. Well, I'll give you one Australian to the dollar, see if the chart makes any sense. This is the Aussie versus the dollar. Okay, so there you go. Same thing as the Canadian. So if you were going to be bullish on the Australian, would this be the neighborhood to be bullish? And again, it's a little bit of a proxy for commodities because they are commodity-oriented countries. All right, so that's the story on the currencies there. Let's go over the interest rates, and then we'll go into the cannabis. Interest rates. This is 20-year bonds. Now, again, here's been our view on interest rates. During that panic in the first quarter, where this market went down to there, right? We were thinking that that is going to be the low in the bond market, and that means the high in yield, okay? Since that time, we had a drop in yields. Now we've had yields rise. But do you notice that the yield rise has not taken out the March low? That's very important. So if we get this market above 162, now let's call it 163. If we start trading above 163 and then get above 168, everybody who's talking about higher interest rates are going to be absolutely wrong. And if they are wrong, that's a lot of people who are wrong. And why would interest rates not go up? A, because we can't afford it, just like Japan and Europe have negative interest rates. And both of those countries peaked on their 10-year note at 1.75, just like we peaked in March of this year. Their peak in Europe was in 2014. The peak in Japan was 2011. And they've never seen 175 since. Why? Because they've run up their deficits just like we did. So maybe this talk about higher interest rates is not correct. Right now, it could happen. If we take out 155 and we take out 175 on the 10-year, I will be not bullish or not positive on bonds at all. I'm not really positive on them. I'm neutral, but the bottom line is I'm not negative on them until we take out that low, because I've seen a lot of news hit a market and it still hasn't been able to take out the lows of March. That could have been the taper tantrum, okay? Until we take it out, that's my view. Now, again, I wouldn't be positive on this market until it started trading back above here, which is 162 and change, or 163 and change, which it's not doing. The 10-year note looks pretty similar. But a lot of these markets are very exciting because, again, they're very much on the ledge. I think the dollar's getting to the ledge. The metals are getting to the ledge. Interest rates are getting to the ledge. And again, probably stocks as well. Now, this is the 10-year note. It's in a little better shape than the long term. 20 years out is the long-term bond and 30 years out. That's a long time to be loaning money for 2%. Here, this is 10 years out. And again, that was the lows of March. And we haven't taken them out yet. But if we do, then obviously the crossing of all these averages, see, we've already crossed the 12 SMA under the 24. That's not a good thing. And if you start taking out this low, then and if you stay down here, then this whole trend is going to roll over. So am I saying that interest rates can't go up? Absolutely not. Am I saying that the technicals have deteriorated? Yes, they have. Am I saying that there's still not that last nail in the coffin? And that's what I'm saying. And the last nail in the coffin is if they can get the 10-year above 175 and keep it there and turn these graphs down. Because if we go above 175 and there is a crisis in the bond market, you realize how much debt has been created. You imagine the panic of people wanting to redeem bonds into a dealer environment, because bonds are traded between dealers, and if dealers put away their checkbook like they did in March of 2020, bonds can go down 50% for all you know. Okay, so there is a big risk out there because there is a bubble in the debt market, and it's extremely overvalued. And that's why people think stocks are so cheap, because the bond market is so ridiculously overvalued. Like I told you, you have negative yielding junk bonds. That's a joke. All right, I got 15 minutes to give you what I got on the cannabis. What is the story on cannabis? Basically, it is that it got wider acceptance, and there is a growing amount of nations and states that are saying, okay, you can use it for recreation. Okay, you can use it for medicinal purposes. That amount of people is probably going to grow. That's the bet. And so the bet would be that these companies that are in the business may actually be, oh, by the way, one last thing on commodities. This is something that we follow. This is the Vanguard Commodity Fund. It's a one-stop shop for people who just want to have exposure to a broad-based index type of fund. Now, you need to get the prospectus. You need to get all the details on expenses and everything else. So get that. But this is what it does. And as you can see, it's only been around for a couple of years. And so it came out, went down a little bit for a little bit, and then it's been a buy signal since 23. And look where it's at today. It's at almost 37. So if you like commodities and you said, okay, let's just buy this thing and I'll track a broad-based index of commodities, this is a one-stop shop that has certainly been a good place to be. Overextended a little bit, yes, but it is the vehicle people use to get exposure. And obviously, you set it and forget it, and then you have exposure. And obviously, sometimes you'll have big drops. But if you want exposure to the sector and you don't want to try to play pin the tail on the commodity, this would be something to look at and get the prospectus on. Okay, getting back over to cannabis again. So that's the story on it. There's 3 levels of cannabis in our view. One is called value, one is called growth, and one is called momentum. And there are different stocks for different groups. Now let's talk about the big boys, Constellation Brands, which just announced their earnings and they did great. And let's see if that's a one-stop shop for everything Vice. 217, okay. 20-year graph on it. Let's look at it 3 perspectives real quick. Okay, so it's got all the support down here right under 200. RSI is still above 50. So if you wanted to get Corona beer, Modelo beer, bunch of wines, and pot, this is the way to go. All right, and that's Constellation Brands. Canopy is the big one here. Let's look at the big ones before we get into the ones I'm talking about. What's Canopy look like? Okay, Canopy hadn't been around a long time, so let's look at the 1 year. Yeah, obviously a nightmare for most people, but down here, is it a nightmare? You don't know. RSI is still under 50. I don't like that. All the moving averages are pointing down. I don't like that. So what do I think about Canopy? I think it needs to get above 16. I need to get these moving averages looking like they were over here. And I certainly want the RSI above 50. So could it be a good deal? Yeah. But as far as right now, it doesn't look like it has tremendous technicals. Looking at Chrono. Yeah, same story, different, same fleas, different dog, right? Basically, you're in a down draft here. RSI doesn't look very good. You start closing above 6, that would be a positive. So, get it above 6, get the RSI above 50, and maybe there's a turn in your future. Looking to the last one here, which would be Tilray. And on Tilray, what do you got? Tilray, again, same fleas, different dog. Basically, they're all in a downtrend. You need to get this thing back above 12, $13. You need to get the RSI above 50, and then it would be worth talking about. All right, now let's talk about the different sections. First one is value. When you talk about value, you're talking about sometimes price to sales ratio. How much are you paying for the stock for each sale, for each dollar of sales? So these are ones that have pretty attractive price to sales ratios. Let's go and look at them. First one is HITI-V. Let's see how it looks. Okay, again, a lot of these things are still in down looking trends, but if you're a brave guy, you could use 7 as a get out point there, and maybe those two lower highs versus that as a turning point. I don't know. Personally, I'd like to see the RSI above 50 and the stock above 9, because these are things you plan on making a lot of money on if you're correct. So you don't have to be in there in the first dollar or two. You want to be in there for the $5 and $7 moves, and that can't happen unless you get above 9. Okay, next one is going to be HEXO.TO. Again, penny stocks, obviously a dice roll, but they can't go lower than $2.21. So that's good news. You can only lose 221. But again, the technicals here doesn't look like anything's happening right now. So those are two of the value ones. Let's turn over to some fastest growing. That's where you have the highest year over year sales growth of the recent quarter. And so let me give you a couple examples of that. No, that one's not coming up. Let's see if this one comes up. Yep. Grow generation. Again, it falls into the category of fast growing. And let's see what fast growing looks like here. Yeah, well, this one's up pretty good today. I don't know if you were aggressive, you'd use these lows as your get out point. It would be nice if it can close above 25.17, and it'd be even nicer if it can get above this blue line, which is at 28. Your RSI is still under 50. So if you can get it above 50 and get above 28, maybe you got a turn going here. Again, another one where you don't have to be the first guy in there, because you're playing it for a bigger move if you're buying it and holding it. Still, they all seem to lack real great momentum. This one's interesting to me because here in our area, they have a big dispensary here. This is called Planet 13. PLTH.CX. Planet 13. There you go. CN, I'm sorry. Planet 13. They got a very, very, very large dispensary. So let's see what they look like. Now, this one here, again, if you can get above this $6, $6.50 area, this one would be interesting. Your RSI is still under 50. So if you can get above this 625 area and get above this these moving averages, I would be looking at this one. At least I'd be able to walk into their local dispensary and say, hey, I own some shares, Anyway, so I had a little familiarity with that one. Now let's talk about momentum. And momentum are stocks that are rising faster than the general stocks. And the big one that everyone talks about is Sundial. So let's see if that one looks any good. Yeah, real flatliner here, huh? But if it could get above 70 cents, 75 cents, it would be, it looked like it might be able to be worthwhile. But a penny stock, you're just, you're gambling 64 cents that you would have spent on a newspaper or something like that. So, you're just, you're taking a gamble with a very small amount of money out of pocket. And this is another one here. last one. Yeah, again, another one, penny stock. You need to get above 350, and then that might be a train that's going someplace. RSI is right there. So love to get it above the blue line, love to get it above 50, and then I'd be more than willing to talk about it. All right, we're at the time where I've got to sign off. This is optionprofessor.com, OPTIONPROFESSOR.com. You go to that website, you put your email in, and free of charge, you'll get an update of all the stuff we're looking at each and every week. And that includes everything from the stock market, all the stuff that we've talked about here today. And then the best thing about it is we've got an email address of optionprofessor@gmail.com. If you have any questions on options, like, how do you do a collar strategy, or how do you sell puts, and how do you do spreads? And I'm in this thing and I really know what I'm in. Do you have I have some questions, can you help me? We don't give advice, but we're allowed to give opinions, and we're allowed to answer questions with our opinions, and we're more than happy to do it. So optionprofessor@gmail.com. You shoot me the question and your contact information, and I'll give you a ring and we can talk about things if you have questions. Again, it's been very great to have you guys here today. I hope you learned something. I certainly went through a lot of details with you. So if you had your pen and paper, I'm sure you got a lot of ink used up. But again, for the Option Professor, I'd like to say thank you. And I hope you go over to the webinar, to the website, and put your email in, and go to the email address at gmail.com, optionprofessor@gmail.com, and submit any questions you have and take advantage of our knowledge and experience. Okay, sounds great. I'm going to now send it back over to David. Good luck with all the rest of the speakers. It's been a great broadcast here. So thanks for having me, and back to David.